Hello everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to yet another promising edition on the Extra Speed Live, as the last 24 hours has been quite phenomenal across all the assets on our watch list for this week. Before we get into the exciting details, I would like to quickly run through our daily routine just to confirm that we are all on the same page, and then we can get started the session. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. So your highs will give me a positive feedback that we are all good to go this morning, and then we can kickstart the session. And if you have some technical issues, probably the sound quality isn't good or the video is not doing well, please let me know, as well as I will be willing to do the necessary adjustment to make us have a better experience. So please let me know. I really look forward to your feedbacks. It goes a long way in helping me know that we are all on the same page, and thank you very much as you do so. All right. I can see a couple of comments. Thank you very much, guys. I really do appreciate those feedbacks. I can see from Ibrahim 880. Thank you very much. Big Bags, good morning to you. Gog Bale Froms, good morning to you. Cut 446, thank you very much. And I can also see you 9660565. Good morning. Cut 446 again, thank you very much. So in the with this couple of feedbacks, I would like to take this as a confirmation that we are all good to go this morning. And it's on this note I welcome you all once again to yet another promising edition of the Extra Speed Live Technical Analysis Session, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we shall be reviewing the financial landscape one more time to understand what is going on, how we intend to use the historical data to strategically position ourselves for the next move. Well, so far this week we have been monitoring 4 financial assets, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also have the GBPUSD on the table, and finally my favorite asset, of course, which is the XAUUSD, popularly known as the gold. Now, on this asset so far, we've done pretty well, as all of this asset has recorded some significant profit, and we are going to be looking at that in detail in a moment. And in fact, I have very simple trading setup that we will be using to follow up on this asset today, so you don't want to be missing out on any of the ideas we will be deliberating on today. For those of you who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us this morning. And I know you will be wondering what this is all about and what is it that we really do during the Extra Speed Live Technical Analysis Session. Well, As technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current positions in preparation of both of the New York session. The session kickstarts 10 a.m. UTC, 11 a.m. West African time daily, and I recommend that you stay tuned in so you don't miss out on the insight that we will be sharing today. And remember that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section below. And before we go into the details of what we are going to be doing, before we go through our daily routine, I have an exciting news to share with you guys. Now, I know you will be wondering, why am I having the BTCUSD chart right on the screen? And of course, we know that this is not part of the asset we are monitoring for this week. Well, I want to talk to you about something really exciting happening in the world of Bitcoin. It's called the Bitcoin halving. Now, so it's a trending situation in the last couple of weeks now, as you will see, and this, of course, the momentum has been gearing towards this event, and this is reflected on the chart. As you will see, the price of Bitcoin is at an all-time high. Now, so what exactly is Bitcoin halving all about? Well, it's like a big event that happens approximately every 4 years, built right into the Bitcoin protocol. Now, during a halving, the reward that Bitcoin miners receive for validating transaction on the Bitcoin network gets cut into half. Now, imagine suddenly getting paid less for doing the same job. That's what's happening during a halving. Now, why does this matter? And where is this taking us to? Well, the reduction in the supply of Bitcoin entering the market can really shake things up. With fewer new Bitcoins being created, it can change the balance of supply and demand, potentially affecting the price of Bitcoin. And in fact, some experts even believe that Bitcoin halving events can cause the price of Bitcoin to go up because existing Bitcoins become more valuable. And guess what? We might be gearing up for the next halving event in May 2024, which is not yet confirmed at this point, but this is tentatively somewhere around that area considering the previous halving that has happened. Now, while there are other factors that influence Bitcoin's prices, halving events generally seen as bullish for the cryptocurrency. Of course, this could also bring about some volatility, but that's part of the excitement as well. Now, here is where things get really interesting. You can take advantage of this phase by trading Bitcoin on the XTrendSpeed platform. And with all the buzzing surrounding the Bitcoin halving, it's a perfect time to get involved and potentially capitalize on any price movement. So you don't want to miss out on this opportunity. It's a very, very privileged time to capitalize on this volatility and enjoy the momentum that comes with it. So if you want me to include the BTCUSD into our watch list for next week, I would like to know in the comment section. Give me some feedbacks as regards to this, and trust me, I'll try to put it into our plans for next week, and let's see how we can also join the momentum as we gear up for the Bitcoin halving event. So let me know in the comment section if you want us to look at it. All right, so with that being said, here we shall be diving right into the business for today, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiments today. And these fundamental factors we know often manifest on the charts in technical patterns and price movement, and by monitoring the economic calendar we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on the asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. Now, for today, we have only one high impactful event, so I had to include some mid-tier economic features so that we can have an idea into what market participant will be looking forward to. So for today, Tuesday, March 5th, we have the first high impactful event for today is coming in about 4-5 hours from now, and that is the ISM Services PMI. Now, for those of us who do not know, this is a key economic indicator that measures the performance and expectations of the services sector in the United States. A higher than expected data typically signals economic expansion, while boosting market sentiment, of course, while a lower than expected reading may indicate contraction and potentially dampening investors' confidence. Now, the gauge is the index is on a scale of 0 to 100, where anything above 50 is considered as positive or considered as an expansion, while anything below 50 is considered as a contraction. Now, if we look at the previous data for the month of January, it came in at 53.4, as you will see right here, which is a little bit reasonably above the 50 mark, giving us an insight into some expansion. And based on what is on ground right now, economists are projecting 53, a little bit lower than the previous data, but still records an expansion in that regard. So we are going to be looking forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? Then besides the ISM Services PMI, we had the BRC like-for-like retail sales data, which was published earlier today from the United Kingdom economy. Now, for those who don't know, this is a data that shows the performance of the retail sector in the United Kingdom, and a high reading is considered as positive in favor of the pound sterling, while a low reading is seen as negative. And if you look at the data that came in this morning, we had a 1%, which was way below the expectations of 1.6%, and of course below the previous data of 1.4%, hereby giving us a deficit of 2.33 deviation. So the market reacted negatively to this event. Remember, we were buying the GBPUSD prior to this event, and we saw how the market dropped to the downside in reaction to this event. So we are going to be looking at how well the GBPUSD has done so far and how we intend to capitalize on the next move from where we had. So you don't want to miss out on that session too. Then later on today, we are going to be looking at speeches from Fed official Mike S. Barr. Mike S. Barr is the vice chairman for the supervision of the Board of Governors of the Federal Reserve System, and is also serving as a member of the Board of Governors in the Federal Reserve. So he's a big weight in that in the system. Hence, whatever he says today is going to carry a lot of weight, and market participants will be looking forward to the speech, as it will be giving us an insight into the monetary policy stance of the Federal Reserve, economic outlook, and potential future policy actions. So these are the events we are going to be looking forward to today. So I encourage us all to mark out the timing of this event so that we can align it with the structures and patterns we will be identifying during the course of the session to strategically position ourselves for the next move. So with that being said, here we will be diving right into the business. So as usual, the first asset we are going to be taking on this morning is going to be the US All Sport. Now on the US All Sport, we had quite an interesting situation in the last 24 hours where we saw price action move to the downside, breaking down that ascending trend line we identified at the beginning of the week. Now, for the sake of clarity and for the sake of those who missed out on our session from yesterday, let's quickly run through what really happened during the course of the session. So at the beginning of the week, we identified an ascending trend line where we saw price action floating above that structure, and in fact it was supposed to be serving as a yardstick guiding our trading decisions. So if price remains above the ascending trend line, we obviously want to be looking out for patterns and structures that support the idea of buying, and only when the ascending trend line is broken to the downside can we start considering selling this asset. Now, in addition to the ascending trend line, we did observe that during the first 8, 10, 12 hours of the week, price action was more or less confined within a range that is between the $79.80 level and the $79.25 area, where it revealed the prevailing uncertainty in the market at that point in time. And usually whenever we identify a range-bound trading activity like this, we usually exercise patience waiting for a signal, either in the form of the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And one interesting thing about the structure we did mention yesterday was the fact that price action had already broken down the support line of that range, and of course that ascending trend line to incite a potential signal for bearish opportunities. Now, what we did here yesterday was that since price has broken down the structure, we are going to be looking forward to a retest of either the $79.25 level or the ascending trend line to join the bearish move. And as a result of this, I did mention here yesterday that if price comes back to retest any of the structure, we will be having a sell stop order below the $79.25 level to join the bearish move to the downside. And this was exactly what happened a couple of hours into the New York session to trigger our first sell position for the week. And then we went on to add more sell positions as price action broke down the $78.50 level, making us ride the momentum all the way to the downside, giving us over the first sell position moved over 150 pips, while the second sell position moved over 70 pips. So we had roughly over 200 pips on that particular move before the bullish momentum came in. And as you all know how we do it in this community, whenever price action moves significantly in our favor, we want to be moving our stop losses and secure and protect the profit we had made. And if you had done this appropriately, you must have been taken out of all sell positions at least with a minimum of 150 pips. And for those who did capitalize on this profitable journey, well done and kudos to you. So at this point in time, we do not have any positions running right now, as we will try to decipher what's the next course of action on this particular asset. However, before we go into the details, I want to emphasize that it is surprising for me to see price action drop to the downside on the US All Sports despite the fundamentals we talked about yesterday. We talked about the concerted effort by the OPEC Plus nation to enforce voluntary cuts in oil production, which is expected to incite some bullish traction. And of course, we saw that happened last week. And this is one of the reasons why I'm considering this bearish momentum we've seen so far maybe to be a retracement move of that bullish move that happened last week. Then we also have some other couple of factors which support a bullish traction, one of which is the geopolitical tensions in the Middle East, which we saw how the Israel Prime Minister had decided not to participate in the mediation organized by the Hamas and the Egyptian mediation. So this has also resulted in stalling of any ceasefire in that area. So the escalating tension still continues. Then we also heard of the UT telecommunication minister on Monday saying that ships must acquire permission from the UT-controlled Maritime Affairs Authority before entering Yemeni waters. So this is another heightened concerns as regards to disruption of oil supply from that region. Now, with all of these factors in place, we would want to understand how market participants are thinking at this juncture, and the only way we can do that is by looking at what price action is saying. Now, before we go into the details here, let's run through the higher time frame to see what we saw at the beginning of the week. Now, on the higher time frame, the first thing we did was to acknowledge the $78.50 level as our key level for this week, and of course we did emphasize how this level here had played a major role in determining the direction of price action since the month of July of last year. We saw how this area was a strong buying niche at some point for about 2 months or so between July and August / September. This area was a very strong demand zone before it finally was broken to the downside in the month of November of last year, and since then price action has been trading below the $78.50 level to emphasize the strength of the sellers at this point in time. And of course you can see how every attempt by the buyers to break through has always been met by strong resistance from the sellers, and this continued into the last 3 weeks in this market, and not until last week's trading session that we finally saw the breakout of that $78.50 level. Now, if you also recall that we emphasized that the $78.50 level may also be serving as a potential neckline of that reversal pattern we saw on this chart. Now, after taking into consideration the bearish impulsive move that started in the month of September, we saw that at the beginning of the month of December, we saw how it became difficult for sellers to continue the momentum, and this led into a series of higher lows, resulting into a potential reversal pattern where we were using the $78.50 level as the neckline of that pattern, and of course waiting for the breakout of the neckline to validate that reversal pattern. Now, we saw that happen last week. Price broke out of the neckline, as you will see here, and the question as at the beginning of this week was that will price come back to retest the structure to validate the breakout, or will the breakout turn out to be a false one where price may drop below the $78.50 level to incite more selling opportunities? So in order to strategically position ourselves for the next move, we decided to scale back down into the 1 hour time frame to see and monitor how price market participant will be reacting to that key level to identify patterns and structures that we will be using to guide our decisions going forward. Now, with that being said, we will scale down into the 1 hour time frame, and this is what we have here. And from yesterday's setup, we were able to capitalize on a bearish momentum that led to the breakdown of that key level, which of course is also serving as the potential neckline of the reversal pattern we identified on the daily time frame. Now, if you look at what has been going on here in the last 2 weeks, I think, yes, you will see how the lowest point here at the $77.70 area had played a major role in determining the direction of price action. Now, look at what happened here. It was a selling niche at this point. Sellers took over the market here, and when price broke out of the structure as at last week trading session, we can see that since then price action had remained above the $77.70 area. As you will see, every attempt by sellers to break through was met with strong resistance from the buyers. Now, with the situation we have here and looking at what happened in recent times, we saw that despite the strong bearish momentum from yesterday's trading session, price was unable to even come close to that $77.70 area, and in fact the attempt of coming close to it was met with an engulfing bullish candle, and in the last 4 hours we have been noticing buy pressure above this area. Now what this simply tells us is that that area around the $77.70 area has a strong memory for buying power, so it doesn't make any sense for us to consider selling above this level. Hence, we will be looking out for patterns and structures that support the idea of buying, maybe leading to the breakback above of the key level at the $78.50 level to capitalize on buying opportunities. Now, another thing I would like to call your attention to based on the recent market structure is the impulsive move that brought us to this point. You saw this impulsive move break down the key level at the $78.50 area, as you will see here, retested it and come to the downside, and this downside here is looking more like the shoulder of a potential head and shoulder pattern, where the formation of the right shoulder may incite the breakout of the $78.50 level, which will be serving as the neckline of that reversal pattern to give us an opportunity to join an uptrend move. So at this point in time, considering the continued buy pressure above the $77.70 area, I want to be looking out for buying opportunities at the breakout of the $78.50 level, as the breakout here will validate a reversal pattern, and then we can capitalize on more buying opportunities at the breakout of multiple levels, such as the $79.25 level, the $79.80 area, and of course the highest level for this year at the $80.30 level. So I do encourage us all to mark out this level, as we will be using them to maximize the potential of the bullish move. However, if the contrary happens and selling pressure continues, well, the breakdown of the $77.70 area will be all we need to join the bearish move to the downside. So let's see how the market is going to play out here, as our center of focus for today's trading session is basically between the $78.50 level and the $77.70 area, where depending on the direction of the breakout will give us an insight into where price will likely be going for today. So I encourage us all to mark out these levels, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on this asset for today. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. Stay tuned in. All right. So I see a comment from Jacob, not 4930. Good morning to you, Jacob. Trust you're doing very well. You're saying here that you want to make sure that you understand it correctly, so you advise to wait and see the price movements. Okay, so if the price goes over 78.5, you advise to buy, and if it goes below 7.7, you advise to sell. Perfectly correct. That's what we said. So I hope you have no other questions. That's exactly what we said. So that's where our center of focus is for today. All right. Okay. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the USTech100, popularly known as the Nasdaq. And what another phenomenal day we had here on this particular asset, as we rode the bearish momentum all the way to the downside, scooping in over, how many pips do we have now running? Let's see. From here to here is about 197 pips in profit. And for those of you who capitalize on this opportunity, well done, and kudos to you for being on standby. So let's quickly run through what really happened yesterday and what led to the decisions that we made. So at the beginning of the week, right here on the 1 hour time frame, we had a situation where price action was range bound, confined within the $18,330 level and the $18,290 area, giving us a prevailing uncertainty at this point. And you know how we use our range bound structures on the chart whenever we identify them. Due to the uncertainty, we will usually exercise patience and wait for price action to either break out of the resistance line of the range to give us an opportunity to buy, or break down the support line of the range to give us an opportunity to sell. Now, with this whole situation we had here, after our live session, we did not see at any point in time price action even come close to the resistance line of that range, hereby negating any idea of considering buying. So all we were seeing was price action trading around the support line of that range, and in fact we saw the breakdown happen about 2-3 hours into the New York session. And in fact, if you had missed out on that opportunity, the market was kind enough, came back to retest the structure, and lo and behold, down we go. So for those of us who capitalize on this opportunity, well done, and kudos to you for being on standby to capitalize on this move. And with over 195 pips in profit, it's high time we moved all our stop losses and secure this current sell position, as we do not want to give back the profit we had made to the market. So if you would ask me, based on this current structure, I will be suggesting that anywhere around the 1,850 and the 1,825 seems most appropriate to place your stop losses, while we give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action? Are we going to continue selling this asset, or are there chances that we could see a bullish traction evolve from this particular structure? Now, before we can give a well-informed decision on this asset, let's run through the daily time frame so we can have an holistic perspective into what has really been going on at this point. Now, remember, at the beginning of the week, our first point of contact was the daily time frame, where we took into consideration the character of price action since the month of November of last year. That's an historical data of about 4 to 5 months, and it was quite obvious that price action has been very bullish. And after connecting the series of higher lows, we have the support line of the ascending channel we identified. And when it connected the series of higher highs, we have the resistance line of the ascending channel. Now, when we zoomed into the current structure, that is looking at the character of price action in the last 3 weeks, we were able to identify a key level at the psychological area around that $18,000 mark, as you will see here, which was finally broken on the last trading day of last week to test a phenomenal high at the 18,340. And of course, you know how we use our key levels. We want to be looking out for patterns and structures that support the idea of buying that asset. And if price drops below the key level, we want to be looking out for patterns and structures that support the idea of selling. And while we were observing this structure yesterday, we did acknowledge that as soon as price action tested the 18,340, we begin to notice some selling pressure resume from that area. And this persisted into Sunday session, Monday session too as well. And I was of the opinion yesterday that we might likely see a situation where price may come back to retest the $18,000 area, which was broken on Friday of last week trading session, to incite an uptrend continuation, or a breakdown could incite a massive sell-off to the downside. Now, with this situation, you can see since yesterday, thank goodness we were part of this bearish move as we rode the momentum all the way, and we are looking at somewhere between the $18,000 area, that key level, and that ascending trend line as a TP target. And in fact, if price action goes further to break down that structure, we will be looking out for more selling opportunities. So at this point in time, the question we want to be asking ourselves right now is, how far will this bearish momentum go before the next wave of bullish momentum will happen? So is it going to test the $18,000 area, or is it going to break down the $18,000 area? And in fact, if it tests the $18,000 area, what are we going to be looking out for? Well, if it tests the $18,000 area, we want to be looking out for reversal patterns like double bottom structures, inverse head and shoulder, falling wedge, after which we mark out the neckline and then buy the breakout of the neckline. However, if price breaks down the structure, then this will be a beautiful opportunity to add more sell positions to our existing trade. So with this information we have gathered at this juncture, let's scale back down into the 1 hour time frame to see how we want to strategically position ourselves for the next move. Now, scaling back down into the 1 hour time frame, we need to acknowledge the $18,000 area. So I would like to extend it further. So right here, so we have it right here, and as you will see, price action has already broken down another new level that I identified this morning at the 18,125 level. So I want you to mark out those levels on your chart, as you will be needing them as a reference point. Now, another thing we should also take note of is this ascending trend line that was broken on the 4 hours time frame. So I would like to show you something on the 4 hours time frame. So we have this structure here. This is the 4 hours time frame, and right on the 4 hours time frame, we were able to take into consideration the character of trading activity since the beginning of the year, giving us an ascending trend line. And of course, you will see price action has broken down that ascending trend line for the 3rd time this year, right at this point. So usually from a technical standpoint, when price breaks down a trend line like this, we might want to see price come back to retest the structure to further incite a bearish move. So I wanted you to see this before I talk about something on the 1 hour time frame. So going back into the 1 hour time frame, so this is the ascending trend line here, as you will see. So this is the ascending trend line, and it's going to be playing a significant role in guiding our trading decisions for today. Now, as it is right now, since price has broken down the 1,125 area, we shall continue to look out for more selling opportunities. So what we are going to be doing here is to see if the market will come back and retest the structure. If it does, come back and retest and we see selling pressure on our lower time frame, we will join the downtrend continuation, where we shall be moving all our stop losses accordingly to secure the position as soon as price action comes close to the $18,000 area. Now, if price gets into the $18,000 area, we are back at a sensitive zone, a level which was broken last week. So are we going to see a retest of that structure to incite an uptrend continuation like I showed you earlier? So if we see double bottom structure, for instance, a breakout of the neckline will welcome buying opportunities, where we will also ensure that we monitor price action along the ascending trend line here, as we may see a downtrend continuation from there. And if we look at the distance between here and there, that's about 200 pips, which is something we also want to catch if price does that. But if it breaks down the $18,000 area, then we have no other choice at a retest of structure to join the downtrend continuation. So that is how we are going to be managing this trade from that point. However, if instead price does not come back to retest the structure before going down, and it just breaks above the 1,825, then I will be advising us to look out for buying opportunity at the retest of the structure, joining an uptrend move to the upside. Now, always remember that if we are joining any bullish momentum from this point, please note that we want to see how the market will react to this trend line. Will it break it? If it breaks it out, then we definitely want to be adding more buy position. As you will see, we have a level here at the 18,160 area, which interestingly shares a confluence with that ascending trend line. So if it breaks out of that structure, we had more buy positions to our existing trade. So let me just mark this one out here. Okay, so I will zoom in so that we can see things clearly. So we have the 18,160, we have the 18,125. A breakout retest of the structure will welcome buying opportunities, and will continue to join that uptrend move to the upside. So it's a simple setup where our center of focus is right between the 1,160 and the 18,160 and the 18,100, depending on where price breaks out of. So let's mark out these levels and see how the market will play, and I do hope you will be on standby to capitalize on the next move. So I hope I made myself clear on the USTech 100. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off due to the limited time we have, so that we can be able to finish the other two assets on our watch list. All right, so okay, I see your comment, Jacob 4930. All right, you're very much welcome. Giovanni 6127, good morning to you. It's been a while since I saw you around. Giovanni, trust you're doing very well. Valia, good morning to you. Safri 71, good morning to you too. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, and what's an interesting trading setup we have here on this asset. Remember, we have been buying these assets in the last 24 hours, and of course we were able to scoop in, I think, about 80 pips thereabout, as we had about 1, 2, 3, 4 entries, though the fourth one did not do very well as we got stopped out on that one, but the first 3 were able to scoop in an accumulated amount of about 50. About 50-60 pips thereabouts on that one, and for those of us who capitalized on it, good one to you. So let's run through what really happened at the beginning of the week. So the first thing we did on the GBPUSD was to acknowledge that our price action has been bullish since last week Friday, as we saw that rebound happen following the below expectation manufacturing sector, manufacturing PMI from the United States, given the pounds the privilege to capitalize on that opportunity, rising to the upside. Now, in addition to the ascending trend line, we had a range identified at the beginning of the week right between the 1.26670 level and the 1.26520 area, giving us something to work with ahead of yesterday's trading session. And as a result of the fact that price action was sitting above the ascending trend line, we were looking at the possibility of buying at the breakout of the resistance line at the 1.26670 level, and of course we capitalized on this one. In fact, if you had missed out on that opportunity, you can see how the market came back to retest the structure multiple times before the uptrend continuation happened, and since then we have been adding more buy positions. Remember, we identified the 1.267 as an opportunity to add more positions. We also added another one at the 1.268, and we also talked about the 1.267, which was also triggered but did not do very well. But at the end of the day, we were able to scoop in some significant amount of profit, and in fact, if you had moved your stop losses accordingly, you must have been taken out of all buy positions. And another thing we mentioned during our live session yesterday was that if at any point in time price action breaks down this ascending trend line, we will be looking out for selling opportunity. And there was a caveat to that statement. As I said, I wouldn't be taking advantage of that move, as the current market outlook is still looking very bullish, considering the breakout of this descending trend line we saw on the 4 hours time frame. Let me show you that quickly so we can be on the same page here. So we had this descending trend line which has been supporting the bearish momentum since the last 2 weeks. So this is the trend line here. So we said here that since price action has broken out of this trend line, the market outlook is looking bullish, and if any bearish momentum happen, it could be in an attempt to retest the trend line that was broken in an anticipation of the uptrend continuation. So because of this in mind, I said that if you are a counter trend trader, a short-term trader who loves taking short-term opportunities, you might want to capitalize on a 50 pips move thereabout. So if you did capitalize on that, I will just encourage you right now to move your stop losses, secure the current sell position, because I'm not sure this momentum will last long. So at this point in time, we do not have any positions running on the GBPUSD. So how do we intend to position ourselves for the next move today? Well, all buy positions have been closed, like I said earlier, and the from a technical standpoint, the bullish outlook for GBPUSD remains intact. However, the focus now shifts to how the bearish momentum will unfold. How far is it going to go? Now, the anticipation of today's trading session, market participants will eagerly await economic indicators from both the United Kingdom, which we already saw earlier, that is the BRC like-for-like retail sales, which of course came below expectation and further incited more bearish traction to this asset. And of course, on the US front, we are going to be looking at the ISM Services Purchasing Managers Index for February, which has been forecasted to dip slightly to 53.0 from the previous month of 53.4. Now, in this context, we would like to understand the behavioral pattern of price action at this point. Now, if you remember, during our analysis from yesterday, our key level was duly situated at the 1.267. And you know how we use our key levels. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. And look at what we have here. Price remains above our key level, as I want to maintain a bullish bias. Now, you will be asking me, what about the bearish momentum that broke down this ascending trend line yesterday? Well, if you look at the momentum closely, you will see that as soon as price got into that area above the 1.267, we saw buy pressure resume from that area. And if we go left, you will see that that area also had been a strong buying niche at the beginning of the week, right? And the situation here where price was even the bearish momentum was not strong enough to even come close to the 1.267 is for me a red flag that buyers still have a say in this market. So with this understanding, I did have my buy stop order above the 1.268, which has already been triggered. And of course, we have another one at the 1.26850, which is just triggered at this point. And then I'm still looking forward to more opportunities to buy at the breakout of the 1.267. So this is how I'm going to be managing my bullish bias on this particular asset, since price still remains above our key level at the 1.267. Now, another thing I would like to state here is that when price tests this ascending trend line, which has already happened, it's important to move all stop losses to your first entry point here, and let's see how the market will react to that trend line. Will it retest it to incite a downtrend continuation? If that happens, I will only be selling at the breakdown of the 1.267. So I will only be selling if price breaks down the 1.267, which happens to be my key level. So if price can break down the 1.267, it would have taken out all the buy positions around this area, which has been peculiar since the beginning of the week with our structure. So if this gets taken out, then we can be convinced that sellers are here to stay. So at this point, let's see how the market will play out. I maintain a bullish bias, looking out for more opportunity at the breakout of the 1.26850 and of course the 1.26700 area. So I encourage us all to mark out these levels and let's see how the market is going to react. Now, to further support the bullish idea, I did connect the series of lower highs since yesterday, as you will see, to acknowledge the bearish momentum. Now you can see how beautifully that trend line shares a confluence with the 1.26850. So if we can see a breakout of that structure, I'm of the opinion that that may incite a massive uptrend move. So let's see how the market will react to the structure. You would agree with me that we're at a crucial juncture right now. So if you had capitalized on this buy opportunity, well, try to move your stop loss to the entry point and let's see how the market will react. But one thing I know for sure is that if price can break out of this confluence, and then we shall hold on to a bullish bias. So that is my simple view on the GBPUSD for today. If you have any questions, feel free to let me know in the comment section. So I will take the next 5 seconds just to give a chance to see if there are any questions. Then we will move on to the final asset on our watch list for today. All right, so in the absence of no questions, I want to take that as a confirmation that we are good to go. So let's move on to the next and final asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And what a phenomenal 24 hours we have here as we capitalize on the bullish momentum at the breakout of the $2,086 level. And in fact, we have a minimum of 4 to 5 positions running in profit at this point. As you will see, let's run through what really happened during our live session yesterday. So since last week, we have been enjoying this bullish momentum right from Friday's trading session, and this momentum led into a situation where we saw price action caught within a range between the $2,086 level and the $2,079.50 area. And for the fact that price action is trading above our key level at the $2,080 mark, we were of the opinion that the bullish traction is still very visible. Now, what surprises me most was the fact that I never expected that this bullish traction will be so massive. I remember I said here yesterday that due to the anticipation of the US macroeconomic data and of course the Federal Reserve Chairman's testification before the Congress, we might likely see an extended sideways trading activities to emphasize the prevailing uncertainty in the market. But never knew that it will be a short one, but thank goodness we were always on standby to capitalize on whatever opportunity the market presented to us. So with a range bound trading activity, we had to position ourselves at the support line for selling opportunities if price action ever breaks down the support line. And of course, you can see that price was not even close to that area, and we saw how the market broke out of the resistance line at the $2,086 level to trigger our first buy position. And remember that we added one more level at the $2,088 area to maximize the potential of this bullish move. Well, during the bullish traction yesterday, I had the privilege of adding two more positions to my existing trade, but I do hope that you also capitalized on it. But if you didn't, well, the two positions here is quite enough. As you will see, the first position, if you still have your position running, is currently running with close to 400 pips, while the second buy position is running with about 370 pips. So on an average, you should be having a minimum of 700 pips running in profit on the XAUUSD at this point. So well done and kudos to you. So as it is right now, how do we intend to capitalize on the next potential move? Well, with having accumulated over 700 pips in profit from the two buy position, it is prudent to safeguard all our current position. And if you would ask me, anywhere between the 2,120 and the 2,115 seems most appropriate to place all your stop losses to secure this current buy positions while we look out for more opportunities to maximize the next move. Now, gold prices are mirrored the corrective movement observed on Monday, as we saw what happened during the later part of the New York session stroke the Asian session, where price action was confined within the 2,120 and the 2,110 level to emphasize the prevailing uncertainty at that point. And of course, you know how we do it whenever we have a range bound trading activity like this. We exercise patience and wait for either the breakdown of the range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. Now, if you had marked this level out on your chart based on the knowledge you've acquired in this community, that is so wonderful that you were able to capitalize on that one. So well done to you. Now, at this point, the US dollar tentatively rebounded amidst a risk-averse market backdrop and subdued US Treasury bond yield. At the moment, the US Treasury bond yield is not doing very well. The last time I checked this morning, and we all know how relatable the US Treasury bond yield is to the US dollar. So if the Treasury bond yields drop, the US dollar follows suit, and if the US Treasury bond yield rise, the dollar also follows suit. Additionally, a downturn in the equity markets tend to bolster the appeal and demand for safe haven assets such as the gold, and this is one of the reasons why we can see the price of gold soaring and finding new highs. So at this point, as the US dollar continues to struggle in gaining significant momentum amidst growing expectations of interest rate cuts by the Federal Reserve, possibly commencing in June, that is what we're looking at the moment, this anticipation may provide additional support to gold prices. However, market participants may refrain from placing aggressive bullish bets, opting instead to wait for clarity on the Fed's rate cutting trajectory. Therefore, all eyes are going to be on the Fed chairman's upcoming two-day congressional testimony, which is starting tomorrow. So at this point, it's very, very important that we secure this position, as we might likely be at it's looking as if we are reaching an overbought level, and a correction to consolidate the recent gains might likely happen. So it's very, very important we secure the current position at this juncture. Now, if for those who had missed out on the breakout of the 2120, let's see if the market will come back to retest the structure. It could be the 2115, but most importantly, what we want to look out for is a reversal pattern to join the uptrend continuation. And if that does not happen and price continues to find new highs, then the breakout of this new level at the 2127, so let me light that out. So 2127 level, you can add that level right now, will be another opportunity to maximize the potential of this bullish move. So we want to be adding more positions there. However, if the contrary happens and price continues to drop, I will only consider selling if price can take out the $2010 level. Then I would like to join a bearish move to the downside. So that's the only condition that will make me sell at this point. But as it is right now, maintaining a bullish bias is looking much more reasonable at this point. So this is my simple view on the XAUUSD, and once again, congratulations to everyone who capitalized on this bullish move. So let's see how the market will play out going forward. If you have any questions, feel free to let me know in the comment section. So I will take the next 5-10 seconds off before we start rounding off on today's session. Alright, so in the absence of no further questions, I want to assume that we are all on the same page, and it's on this note we have come to the end of the XAUUSD technical analysis session. And during the course of the session, we were able to take on the 4 financial assets on our watch list, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, where we were able to identify simple trading setups that we will be using to position ourselves for the next move. So I hope you marked out these levels accordingly on your chart. If you have done so, well done to you. So all we just need to do is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to be having a well-defined risk management strategy in place. For those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you have done so, you want to be part of our subsequent editions. Trust me, the more time you spend with us, the better you get to understand our analytical approach and eventually use the information gathered here to make your own independent trading decisions. So I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this asset have been doing and of course prepare for another exciting edition, as everyone will be looking forward to the Fed chairman's testification before the Congress tomorrow. So you don't want to miss out on that session, as it promises to be another exciting one. So it's on this note I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.